So I can see here tomorrow, U.S. retail sales. Well, retail sales today are tanking. Somebody maybe got the report. Somebody leaked the retail sales report today, and that's why everyone's dumping those stocks. Don't know. But that just gives you an idea of what's on the chart or what's on the docket. We are somewhat at an inflection point. You can see there's a 15-minute chart. 15, 15, 15. We're coming up on 45 minutes right at the level that I drew earlier. Everybody see it? Boom, boom, boom. So this confirms the level that I drew. If we break it, it opens the door to 536. Then I'll go look at the options chain and say, well, did the puts all of a sudden increase more than the calls? Do I start seeing 200,000 plus puts at different levels? That could drive a reverse gamma. So I don't care what happens on Truth Social. I don't care about tariff talk, MSNBC. And the reason is the market, just always remember this, okay? They don't necessarily dump puts first, no. Just remember this, okay? This is the key to remember. And then I'll take some questions, see where we go later in the day. This has nothing to do with Trump or yields or the dollar or tweets or whatever. And neither does this or this or this or this or this. If you believe that what you're looking at when you look at a chart is news, tweets, economic data, earnings reports, analyst upgrades and downgrades, geopolitical storms, then you are like every other average retail trader. What I've come to find out in my years of trading is that this is emotion. It's human emotion. Because a report comes out, and that report could mean two different things to two different classes of people, maybe even three. And so there's an initial reaction to whatever came out. When the reaction hits, it might move the needle, but the movement in the needle typically causes another reaction, doesn't it? For instance, if a news item came out here and the algos kicked it down like this, do you think some retail investors, that's the reaction, do you think some retail investors will do something here? They're either going to sell because they panic, or they'll buy the dip if they're not already in it, thinking that, they're going to do something. So there's a reaction to the reaction. And then there's what I do. So what do I do? Do I make a move on the report? Do I make a move on the first reaction? Do I wait for the reaction to the reaction and let it all settle and relax, look at the chart, look at the human emotion levels and see where they settled, and then from a technical standpoint, I make my decision. So candlesticks are a manifestation of human emotion. Because when people get emotional about money, about stock, they either buy, sell, or hold. And based on what they do, that's what this reflects. And because they're creatures of habit, I know that that's what they're probably going to do again. What they did the last time it came down, or did this or did that. Does that make sense? So when people say to me, well, what do you think the tariffs are going to have an effect on da-da-da-da-da? Or do you think once we're past the tariff, da-da-da-da-da-da? Well, what if yields do this, dot. What if gold does this? The dollar does that. Well, what if Trump tweets this? Yes, there'll be spikes and dips all over the place. And it'll kick in algos. There are algos that drive probably 80% or more of the market action is computerized trading based off of algorithms that I don't understand and I never will. And then after those algos kick in, I know that retail traders capitulate. They either get fear, they panic, or they buy, or whatever it is. Then you get the hedge funds dumping, buying. There's so, and then the market maker on top of it all. There's so much manipulation in this thing that I have learned that I'm not in that game. I don't play with the market maker. I don't play with the retail trader because he's an idiot. I don't play with the hedge fund managers because I don't have access to their data. I'm not a computer, so I'm not an algo. I can't predict what the news is going to be. I can't predict how investors and algos will react to that news, nor will I know the reaction to the reaction. So I keep myself informed with the headlines of the news. I keep myself informed with the macroeconomic data points that come out, so I don't step in front of anything huge that might be coming out. I keep myself apprised of earnings reports, and sometimes I trade them. I know what the tweets are, usually after they happen. I watch the reaction to the reaction. I look at what my positions are, and then I make decisions based on technical analysis after I've got all of that in. I've been doing it that way for about 5.5 years. No, I'm sorry, 6.5 years. With Trade With Me now for 5. And it's worked out pretty good. Because I've tried the other way, right? I've, oil tanker, oil spill, crash, So I sell oil. Ugh, geez, that didn't work. Cruise lines aren't going out. They're falling apart. I short the cruise lines. What happens? They gap up the next day. Boeing can't sell Chinese planes. Let's short Boeing. A week later, it's making higher highs. News, forget about it. Do you guys remember when Tesla came out with this battery? It was like 4 years ago. It was called Battery Day, and it was on a Tuesday. And I had learned my lesson. Michael would remember because we traded it. I believe we traded it up, but we got out of the trade Monday at the end of the day, if I remember correctly. Right, Michael? Didn't we put the trade on Thursday or Friday before Tesla Battery Day? The Battery Day was there's going to be this great announcement of this incredible battery that was going to take your Tesla 500 miles or whatever it was, right? You remember it? This is buy the rumor, sell the news. And we're no. We got out, we made money and got out of that trade before the battery. And sure enough, on the day of the announcement, it dropped 3-4% and continued going lower. Who knows why? Mainly because people are buying it up, excited, and they want to take profits. And because all this buying activity surges price higher, kind of like an earnings trade. And it surges so high, they go, let's take profits, let's get out. And that sell-off of people getting out before the event is what causes the aftermath. The algo kicks in about here and sends it down even lower. Then all the panickers that didn't get out, then they panic and then they dump. So I don't trade news. I don't trade data. I don't trade tweets. I don't trade giant candles either. Let it happen. Let the reaction happen. The reaction to the reaction happen. And then I make sensible decisions. I'm not going to get scared out of my SPY vertical until the SPY chart breaks down and says, okay, that's your cut loss, and maybe that cut loss, who knows where it is? Maybe it's here. But for now, I'm holding because the chart is holding. And if it breaks down and I have to take a loss, I'll take a loss. I'm prepared to take that loss. It's a pilot position. It's fine. Same with NVIDIA. So when people ask me, what are you doing with your SPY position? What do you mean, what am I doing with it? You mean, am I dumping it? Tell me a reason why. Because it's in the red, because it's down. Well, okay. How much in the red? 65%. Does your trading plan say get rid of any trade that's down by 65%? If yes, then you don't have to ask me. Dump it. And that's a win. Why is that a win? Because you followed a trading plan versus trading with emotion or gambling. You've got the setup, you got an allocation that works for you, you got a trading plan and a cut loss when to cut the thing loose. You followed your plan to cut it loose when you said you would. That's called trading. Sounds to me like you're a trader, not a gambler, not a novice. Yeah, but I didn't make any money. Traders don't make money every single day. Sometimes you win, sometimes you lose. But if you have a plan, you allocate, and you're trading with technical analysis, allocation, and a trading plan, guess what you are? You're no longer a dabbler or somebody who trades stocks once in a while. That's called you are a trader. Realize that's what you are if you're doing what I just described. But if you see red and you panic and then you dump, that's not a trader. That's a gambler, that's an amateur. And you'll just have to work your way up. All right, I'll take a few questions and then I got to get in the pool with my daughter as the market tumbles. Let me see if there's any other questions. Do you put 0DT debit spreads on after 2 p.m. with CTV won't fade to get you fast? No, not really, because remember, Abdullah, we're not putting on a debit spread to hold till the end of the day. We're putting on a debit spread, and our goal, depending on how many we have, is to sell that debit spread for a profit and or add a credit spread to create the butterfly. So we're not at the mercy of theta decay because we're not holding on to it until the end of the day. We're converting it or selling it within the first few minutes. Rick, my pilot position is never one contract. Never one contract. The worst thing that you could ever do is put on one contract. And you know the answer to this. You're not a newbie. Maybe I don't understand your question. How could my pilot position be one contract? Can you clarify the question? You're not a newbie, so I'm not quite sure why you're asking me this question. But please elaborate so I don't leave you and other people in the dark if you have the same question. Like, what are you actually asking me? Like when I got NVIDIA, are you asking me if I got one contract and one contract is a pilot position? That can't be what you're asking me, is it? Type faster. Is that what you mean? Because I put it in the trade tracker with one? Michael, you're so freaking smart. You know that? Yeah, I put it in the trade tracker as one because I don't put my actual allocation. Just follow my thinking here, okay? The reason why I put one contract in the trade tracker is because it's hypothetical. I don't put my actual allocation because I don't want anyone to follow it. Can you imagine if I put 47 calls for TLT? How many people do you think brand new would go, wow, he bought 47 calls on TLT, I'm going to buy 20 of them? They would use my perceived enthusiasm, right? As a reason to trade more. I've realized this and I don't do that. So I have a hypothetical tracker that just shows one contract, entry, exit, and some comments. Just so that I have a hypothetical tracker to keep track of what I did, right? But I got my own tracker that has my own personal allocation, which I use my burn level. I trade exactly what I teach. I'm probably, and this isn't like patting myself on the back, and I do plenty of that, I will admit, but I actually am a trader, unlike most trade alert services. I trade. If I give you an instruction and a trade tracker and a burn level and a 70-40 plan, like that, I'm giving you what I do. I'm not recommending something for you that I don't personally do. I have a burn level according to the methodology that you find your burn level. I have a pilot position. I have a methodology in which I add to trades. I have a cut level, a cut loss level, and a setup breakdown level. I have target goals. Just like I teach is how I trade.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.